all lenders will have their own criteria, and one thing I would suggest is if you're applying for funding, make sure you understand the requirements and the information required for the lenders that you're applying for. One of the most common reasons for getting declined is you didn't provide the right information or you misinterpreted the requirements. So save yourself some time there and make sure you understand that. Qualifying, as I suggested, credit score is critical. So make sure you're making your repayments on any existing debt on time and you're not taking on too much short-term, high-risk debt. That'll help you maintain a good credit score. Operating time, trading history, and revenue is something, again, all lenders will look at. Lulalend, we have a far less stringent criteria, require less trading history and lower turnover than traditional lenders. And then typically lenders will also require some form of collateral. And that's a major obstacle for many SMEs. As I said, they don't have those physical assets often, but they do have good cash flow. And that's why at Lulalend, we don't require collateral, which makes us often a much more viable option compared to banks. So if you meet those criteria of ours, and in terms of trading history and revenue, it's 12 months trading history and $500,000 turnover per year, then I very much encourage you to apply with us. You can apply with Lulalend in minutes, online, literally in minutes. We don't require any paperwork, and the only information we will ask you is basic personal, business, and 3 months financial history. The fact that it's all online doesn't mean any trips into branches as well, which nobody enjoys doing. The other key aspect of our funding that appeals to so many SMEs is the transparent and easy to understand costs. So rather than an interest rate, we charge a fixed monthly cost, and there's nothing on top of that, no hidden fees, no admin fees, and if you want to pay back the loan early to save costs, there's no early repayment penalties. And that's developed specifically to address a common pain point for business owners, which was I signed up with the bank and I thought it was going to cost X, but add all of these other things on and suddenly it's a very different picture. I've touched on the fact that we don't require any collateral, which is a huge benefit. What that fast online application process and very quick decision-making capability because of the technology we have allows us to do is, if you were to apply for funding today, we could have that funding in your bank account tomorrow. So we can turn around an application and provide you with funding within 24 hours. And we offer up to 2 million rand of funding over a maximum period of 12 months. In terms of the funding options we have, we offer fixed term funding solutions, so come and take a loan for 12 months, 6 months, whatever the period is. But an increasingly popular option is a credit facility, and what this is a pre-approved line of business credit. So as a business, you can withdraw down up to your approved amount whenever you need to. No need to reapply. It's literally log in, a couple of clicks, the money is in your account. So that offers business owners a real peace of mind knowing that I've got instant access to funding when I need it. So it's perfect for businesses that kind of regularly need to tap into additional funding, or when they do, they need it quickly. And it's a really popular product and something our customers who are on that credit facility use a lot and really tell us it helps them run their business and just give them that peace of mind, remove the stress of worrying about funding. Yeah, they do very much, because it basically puts the cost of the borrowing in their hands. You'll take out funding for 12 months. You've got a very clear plan of how much you need to pay and how much it's going to cost you for a 12-month period. But then if your business improves or you come across some extra cash reserves and you think, I just want to pay this off now, you can, and you can minimize the cost. So yeah, it's just they love the control and the flexibility it offers. I mean, it very much depends on the type of accounts or debt that you're you're struggling to meet the repayments or defaulting on, and yeah, less minor accounts, retail accounts, etc. There's generally more flexibility amongst lenders there. If you're struggling to make repayments for home loans, car loans, business property loans, that's a more serious issue and will hurt your credit score more. Ultimately, we take the credit score from the credit bureau, or the credit bureaus, like all lenders, and how long it takes those things to clear and come off your record is in the hands of the credit bureaus there, and it will vary, as I said, depending on the credit bureau and also the type of loan or debt that you were struggling to repay. So it's hard to sort of put a finger on it and then give you a precise answer. But I guess the key message there is on make sure you're keeping those repayments made, and if you are running into trouble, enter a dialogue with the lender that you're struggling to repay. And lenders will generally try and be flexible and work with you. The worst thing you can do is not communicate, ignore it, and sort of hope it goes away. It won't. So address it up front and try and come to an agreement, especially in the current environment. Lenders are trying to be flexible around payment holidays, etc. We do ask businesses what they intend to use the funding for. It's really there as a guide, as part of our decision-making process. But it's not central to it. We're really looking, as I said, at a business, trying to understand the business's cash flow situation. That will determine their affordability, how much they can lend, borrow, and ability to pay it back. We don't offer secured lending. We don't require collateral, and we won't take collateral. So, and as I said, is because we're trying to address that gap in the market, that pain point that exists around SMEs typically don't want to provide collateral. So we won't take security or collateral into consideration. We'll make our decision purely on cash flow and affordability levels in the business. We're very happy with where our bad debt or default rates are, much lower than many other lenders. And I think that does, as you say, give us heart that our assessment models and technology are working and give us the potential to really scale the business and help more SMEs going forward.